You know, when you think of Cisco, you probably think of old office routers, maybe the early days of the internet. A reliable, but let's be honest, a kind of boring tech giant. But what if that whole perception is just completely wrong? Well, we're going to break down an equity research report that makes a really compelling case that Cisco is right in the middle of a massive, and I mean massive, transformation. Okay, let's get into it.
So here's how we're going to break this down. First, we'll look at why the company is at a major turning point. Then we'll dive into the bull case, what's going right, and the three engines driving it. After that, we got to look at the bear case, the key risks. Then we'll tackle the valuation disconnect, which is really the heart of the story. And finally, we'll get to the analyst's verdict.
All right, so let's set the stage. There's this huge disconnect between how Wall Street has been seeing Cisco for years and what the actual numbers are screaming right now.
For the longest time, the story has been that Cisco is a mature, slow-growth company, basically more like a utility than a cutting-edge tech firm. You know, safe, stable, but kind of stagnant. That's been the narrative forever. But here's the thing. That story is starting to completely fall apart.
Because this is the number that just blew that old story to pieces. In its most recent quarter, Cisco posted 8% total year-over-year revenue growth. Now, after a period of contraction, an 8% acceleration is a huge signal that something fundamental, something deep down has changed.
And if you look under the hood, it gets even more impressive. That 8% was fired up by a massive 15% surge in its core networking business. I mean, this isn't just a little blip on the radar. This is hard evidence that a major growth cycle is kicking into high gear as we speak.
So the big question is, where is all this surprising growth coming from? The bull case argues it's not some random fluke. No, it's being powered by three distinct, super powerful, and simultaneous growth engines, all firing at once.
And here are the big three. First, a shocking and explosive entry into the AI infrastructure boom. Second, a massive upgrade cycle in its bread-and-butter business, something they call the campus refresh. And third, a total game-changing pivot to software through its massive acquisition of Splunk.
Let's tackle that first engine, AI. This quote from the report is, well, it's blunt. For a while, the market just assumed that folks like NVIDIA and Arista were the only real players in the AI race. But according to this analysis, that idea is just plain wrong.
And what's really incredible here is the velocity, the sheer speed. Get this. Cisco was aiming for $1 billion in AI orders for the entire year. They ended up booking over $2 billion. And then, in just the first quarter of fiscal 26, they booked another $1.3 billion. That is not growth. That's an explosion in demand.
Now, engine number 2 is happening at the exact same time. This isn't just about massive AI data centers. We're talking about every single office, every university, every hospital you can think of. Their networks are getting old, and more importantly, they all need to be upgraded to handle this new wave of AI applications. Cisco itself is calling this a multi-year, multi-billion-dollar opportunity. And that 15% networking growth we just saw, that's the proof that it's starting right now.
And that brings us to the third and maybe most important engine, the Splunk transformation. To really get why this is such a huge deal, you have to understand ARR. Investors absolutely love annual recurring revenue because it's predictable, it's stable, and it's high margin, totally different from lumpy cyclical hardware sales. This is kind of the holy grail for mature tech companies.
So, they spend $28 billion on Splunk, and bam, instantly Cisco becomes one of the biggest software companies in the world. It completely shifts their business model toward that beautiful, predictable ARR we just talked about. Strategically, it takes their security game from just detecting threats to actually predicting them with AI. And the most crucial part, it's already working. They've signed over 400 joint customers already, which shows the synergy is real and it's happening fast.
Okay, that is a very, very compelling bull case. But, and there's always a but, the story isn't that simple. There are some significant risks and some really powerful competitors out there that could derail this whole comeback story. So let's dig into the bear case.
The single biggest threat, the main antagonist here, is a company called Arista Networks. While Cisco kind of owns the corporate campus, the report says Arista has pretty much stolen the data center switch crown, and they dominate with the cloud giants like Meta and Microsoft.
So why is Arista winning in the data center? Well, it boils down to three main reasons. First, its software, EOS, is seen as way cleaner and simpler than Cisco's fragmented systems. Second, its automation tools are just considered superior. And third, its technical support is legendary in the industry, while Cisco's can sometimes feel a bit bureaucratic.
The second major risk really revolves around that massive Splunk deal.
And the bear case asks a pretty tough question. Did Cisco spend $28 billion not just to pivot to software, but to paper over some really serious cracks in its own business?
And this really highlights the concern. See, before Splunk, Cisco's own security growth was a pretty sad 2%, and its collaboration unit, think WebEx, was actually shrinking. You combine that with the massive risk of trying to integrate two giant companies, and you can see why some folks are worried.
So we have a really strong bull case and a pretty serious bear case. And this brings us right to the central argument of this entire investment report, the huge disconnect between how Cisco is performing and how the market is valuing its stock. Let's just look at the numbers. The key metric here is the forward price-to-earnings ratio. It basically tells you what investors are willing to pay for future earnings. Cisco trades at a multiple of about 17.7. Now look at its direct competitors. Arista. It trades at nearly double that, around 33 times. And the cybersecurity leader Palo Alto Networks, it's not even in the same ballpark, at a sky-high 62 times.
I mean, this chart makes that gap almost painfully obvious. Cisco is being valued like that old slow-growth utility we talked about, while its peers are being valued as these high-growth, industry-defining winners. The entire investment thesis really hangs on this one single question. Is the market right to be so cautious, or is it totally missing the boat?
And this quote just perfectly sums up the analyst's conclusion about that gap. The argument is that the market is stuck looking in the rearview mirror, pricing Cisco based on what it was, a hardware company, and completely ignoring the data that shows what it's becoming, a major player in both AI and software.
So after weighing the powerful growth engines against some very real risks, where does the report finally land? All right, it's time for the final verdict.
The report's conclusion is definitely bullish, and it boils down to these 5 key points. 1. The growth is real. It's confirmed by the latest numbers. 2. AI is not a fad. It's a new, durable engine for the company. 3. The big pivot to Splunk is working. 4. Its massive dividend and buybacks create a nice safety net for the stock price. And 5. The most important point of all, the stock is just plain mispriced for the company it has now become.
So we're left with this one big question. With its growth accelerating, a new AI business absolutely exploding, and a successful pivot to high-margin software, has this old, boring tech giant quietly engineered one of the biggest turnarounds in the entire industry right under everyone's nose? The numbers seem to be suggesting it just might have.